Welcome to a new video analysis of Tradeomics, focus on Netflix. I decided to do this video analysis because Netflix has a particular setup, and given that the earnings will be issued next week, I wanted to make aware traders and investors that on this stock we have definitely a lot of possibilities to expect a downtrend and a retracement from a solid uptrend that started back in 2021. I'm gonna use, as always in this channel, the T cycle analysis, which is a methodology based on cycles where each of and every cycle is defined by time. On the right hand side, you can see here in the legend that you have the description of all the cycles all the way through from the yearly T+5 until the weekly cycles, and you have the days of the duration from the minimum to the maximum duration. So I'm in this channel, you will not hear about fundamentals, but you will always hear about time, as this is a particular and one of the most important parameters that are set up in the algos to buy or sell a specific buckets of stock at any point in time. So this is how funds uses their HFT or high frequency trading to sell and buy stocks. But coming to Netflix, I'm going to show you why we have to be aware of a downtrend or a retracement. So from this top, made on the 17th of November 2021, we have had an upward um, yearly cycle that ended on this top here on the 3rd of February 2023. The total duration of this upward cycle, which was a negative one, lasted 305 days, which is a duration, almost a maximum duration of a T+5. Subsequently, from this top, we have had another new yearly upward cycle. In this case, was positive. So basically, we have tops that are higher compared to the tops from which it started, whilst the first one was negative. And this new upward cycle has reached a total duration of, as of the 5th of July 2024, 356 days. Now, 356 days is encompassed between 190 and 338 days. The answer is no. So here we have an upward yearly cycle that has been stretched over its maximum duration. So when this happens, we have to start thinking about a Bayetong. A Bayetong is basically a subcycles of 3 degrees less encompassed between two cycles of larger duration. And here we have a first T+5 and the second T+5, and the sum of the two T+5 makes a T+6. So the T+6 is basically 2 years cycle. So basically this. And between a T+6 and another T+6, we might have a Bayertongue of a 3 degrees less, therefore a T+3. And this T+3 had a duration of 61 days, which is encompassed between 48 and 89 days. Now, I'm saying that because what happened with this candle was interesting. So with this candle here that was made on the 11th of July on Thursday, so basically yesterday, we had a break of this level of price, which was at $663. And we had also the break of this level of price at $662, which means that from here we have the beginning of at least a T plus 2. Therefore, if we have the beginning of a T plus 2, we need to take into consideration that we cannot go back to the top for at least 8 days. So for at least a median duration of a weekly upward cycle, because otherwise we don't have time to actually have the minimum extension of a T plus 2. Now, the thing is that we're going to have our earnings release basically on Thursday, 18th. So we're going to have the earnings released in 10 days from this top. Now, the thing is that given that we cannot go back to the top for at least 7-8 days, here the possibility to have another upward cycle that will broken up after 10 days is particularly remote, because we are basically at the end of a T plus 6, 2 years. And with this breaks, we have already, from a swings perspective, the evidence that we have a T plus 2 or even a T plus 3 on the edge. On top, you can also see the recent analysis that I issued on the indexes, US indexes, where we have a similar situation on NASDAQ and Standard & Poor's. We have also to close a T plus 3. Therefore, we have, and this T plus 3 now is at 56 days. So here we have two forces that are pushing the price back down. So you need to be really careful now if you want to buy the stock, because if this is a T plus 2 or even a T plus 3, we already know that the earnings will not trigger the price back to the tops, but rather they will push the price back to the downside. So be really careful, because we might have not only the beginning of a T plus 2, but also the beginning of T plus 3 and even more a T plus 5. Okay? We have the possibility to go back to the top. We have, but we have the possibility to go back to the top, or let's calculate statistically. Right. So by the time of the earning release, we will be at 71 days out of 89. Therefore, if we make the right calculation, we're gonna have 71 divided by 89. So we will have 80. So at the time of the earnings release, we will have 80% chances to further proceed back to the downside and 20% chances to go back to the tops. So you know already a week ahead, thanks to this analysis, which is completely for free, the possibilities and the chances to go back to the tops or to further have a retracement. So it's at 80 to 20. That is what the chart is suggesting us, thanks to this methodology. So thanks for watching, and see you to the next episode.